company on our radar. We are looking at Thermax, and that one reported a subdued order intake in Q3. But as we know, the economy is a little bit softish, and things should recover from here on. To understand what's going on ground, we have Ashish Bhandari, the MD and CEO of the company. Hi, Mr. Bhandari. Good morning, and thanks a lot for joining in. Well, tell us, order inflow was a little bit softish in the past quarter, but the hope is that things have recovered. Are you seeing signs of a recovery? And could you tell us from which particular segments are you seeing demand come back?
Good morning, and thank you for having me on the show. I'll take first a look at the quarter that went by, and then I'll talk about Q4, if that's okay. We had a weak Q3. You can see that from the numbers very clearly, and the quarter overall was below our expectations. That said, I think we are in line for a very good Q4 and would request that we look at the performance over the half as a whole. And I've got three reasons why I have this confidence. First, on the revenue side, we had a miss of 500 plus crores on revenue, with more than 60 crores of profitability sitting out there, which in the last 2 weeks of the last quarter, we were not able to ship out. Small reasons, but a very good January to back that we could have delivered that, realized that profitability, and build it up towards a good Q4. Second, there are two portions of our projects business that have been going through difficulty, and both of them have gone through their worst portions in this last quarter. The first was FGD projects, where our worst FGD project is now finishing completion. And second was this whole space of bio-CNG, which is a growth area for Thermax, where relative to what we thought getting into the market, fixing a lot of the design challenges, etc., that we went through, took a lot of money. We have invested more than 100 crores beyond what we had expected in this segment. And we are now finally reaching some point where we have some clarity of what that end looks like. On the orders side, it was soft. The good part of the orders book was that the place which is relatively profitable for us, which is our industrial products division, there our numbers grew by 40%. It is on the project side, which is where our profitability is low, and we are looking for profitable orders to come in, right, where we had practically very little. And that I expect to get fixed in Q4 and beyond.
Okay. All right, Mr. Bhandari. Got that. By the way, we just had some visuals there. The RBI governor was walking in. We're about less than half an hour away from getting the policy announcement now. So, Mr. Bhandari, you do sound fairly confident of seeing a revival perhaps in Q4 itself. Could you tell us in terms of an exit, FY25 exit level for the order book, where could you be in light of the fact of what the government has said, I mean, what the budget has done in terms of CapEx, because there's been some chatter around how they're not going slow, but maybe it'll be different segments. In your earlier conference call, in the Q2 call, you mentioned that you want to stay away from certain large, complex government projects. So just tell us, where will you be in terms of the order book, end of the year, and what role will government projects play in it?
Sure. I think I won't take an estimate on the order situation this early. We've got still 2 months to go. And the reason I won't do it is because on the large project side, we have a very good pipeline now. The win rates remain to be seen. Yeah, so it's best to just wait the quarter. But I do expect we will do more than zero. Even in January, we have closed one order, which is more than 200 crores. We've got one more, which is likely. So I expect a very good Q4 in that sense. We have stepped away from government projects. Yeah, government projects that are long duration, significant amount of civil and construction. We have seen that we have lost money on many of those projects. So now, whatever projects we will choose, we want to get into a place where the assurance of making money is somewhat there. We don't mind doing government projects, especially central government projects, but we won't bid them at the pricing that we have done in the past. Yeah, and a lot of the pain that we are going through on the project side is driven by that portion of the business. That said, we get a lot of business from second order government projects, like government investing in ethanol through the marketing companies that it has. Yes. We get a lot of business from the ethanol segment, sugar, distillery, So we get second order business from a variety of different segments. The first one may not.
Yeah, basically not dealing directly with the government, but maybe the government gives a contract and then sort of, that entity then gives an order on to Thermax. Yeah. But you're the second company today, Ashish. Good morning, Prashant here, telling us that you'll be choosy. REC was with us, but then they said something similar in the same context on the infrastructure project financing side, that they're going to be very choosy. But of course, is, the issue of payments and things like that. The other is, of course, just the flow of government contracts coming off. And that's the broad expectation, and that's a debate which continues after the budget which has happened. And I think it's, if rate of change is, incremental rate of change is what matters to the market, then it is clear that it is coming off. The focus is a little bit more on consumption. Will private sector capex make up for everything? As you were saying, you focus on private sector, or you think the pipeline itself is going to thin out a little bit? Go on.
See, the private capex is where I think the biggest question will be. It did slow down. I think we have had a much better January. We see a reasonable interest across segments. Our pipeline of quotations and order activity overall is nice. It's picked up. But you need to see this over a much longer run to come back and say, look, we have turned a corner. Overall, the fundamentals, I think, of the industry are still strong. And this is macro, I would say. Multiple sectors where there is cash out there available. Overall debt is low. Demand is reasonably healthy, I would say. I think, but we need to see private capex come in. Yeah, more than government capex.
Has the rate of change turned slightly slower? That's the question. I would
say it is actually lately, January, beginning of February, slightly gotten better. But it was low in Q4 post Diwali, which is typically a very busy period. A lot of handshakes, but not enough closures. Some of the misses that we had in revenue were also related to people not picking up equipment that was ready and at the factories, and people not picking those up.
That's really important, and thank you for clarifying and sharing that, Mr. Bhandari. So, what gives you the optimism that this will improve, and when does it improve? In Q4, in Q1, and if you could give us some sense, while I know you can't give us an absolute number, in terms of growing the order book, what sort of a CAGR would be a reasonable expectation for FY26?
For FY26, we are going in bullish. Teens level of growth is what we are planning, mid to potentially even higher teens on the order book side. And this is on the basis of a pipeline that we see, but also a lot of new things that we have been working on which we haven't really pulled the trigger this year. But next year, with more confidence, we can do. We have got areas of the industry, including petrochemical, where we got 0 orders this year. We expect more activity. Steel also, which we've been calling out for a while, we expect to see more activity next year. And even Q4, I'm not waiting till next year. I expect a much better Q4. And when I talked about people not picking up the orders and the revenue miss, a good chunk of it we were able to clear in January itself. What we need to do better now, because the backlog is still reasonably good, is to be able to understand which customers will be picking up and which won't be much earlier in the quarter, and to be able to manage our quarter accordingly, which is what we will be doing now.
All right, Mr. Bhandari, before we let you go, double-digit growth is what you're guiding for FY26. What about the margin outlook? It was a little bit, it's been in that vicinity of around 8% or thereabouts. Could you tell us what is it likely to be?
Improvement there as well. I would say that this is also a period where we are investing heavily. A lot of the areas, including hydrogen, building up our services capability.
Okay. So it will improve from here?
R&D. But net, grow margins, grow top line, grow orders.
To around 8.5 to 9%? Should that be the margin band we work with?
Give us how Q4 ends, and perhaps I'll come back answer the question.
All right.
And just to clarify, you said mid to high teens growth in the order book. What can that translate into the top line growth for FY26? And that will depend, of course, on
give us time for Q4 and let's see where we finish in Q4, because a backlog determines revenue to a large extent. We have a reasonable amount of book and bill, but we need to see how we finish Q4.
All right, Ashish, we'll leave it there, and we'll ask you those questions with specifics next time we speak. Appreciate it very much here on CNBC TV 18. I mean, absolutely nothing on it. 3 points on the Nifty.